This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joel Rabil with Invest Like a Pro. I want to talk about breakouts today and really understanding the difference between when you want to buy the breakout and when you want to look for either a little bit of confirmation or wait for a second entry. And I'll get into that in detail as I go through the video, but you need to make sure, because I think a lot of people lose money on breakouts because they don't understand when it's time to really step on the gas and when to be a little bit more selective about your entry points. So I'm going to show you the first example. We're going to go into ESI. Now, if you've been watching any of my videos on Stock Charts TV, and a few weeks back, actually, I guess it's now been almost a month when I recommended this ESI. Go back through my old videos. I think, if you see where I'm talking about these stocks and get a better understanding of what I am trying to do in and around the breakout area. But this was one that I brought up right as this was sort of approaching these highs and pulled back. And then as it was starting, it looked like it was getting ready to take out this key level. I've already drawn in the horizontal trend line. So when do you just buy the moment it breaks above this horizontal line? And when do you let it break out and then either buy a pullback or wait for a little bit of confirmation? What I think there's three aspects to this that I think you need to understand. One is related to the moving average, and I use an 18 MA, and I would look at it in how the stock looks in relation to the 18 MA. The second thing I would look at is the ADX pattern, especially with the green DI on a long side buy base like this. I want to see what green DI is doing. And then thirdly, I do want to look at the MACD lines. So let's just go into these one by one. So the first thing is, one thing with respect to the 18 MA, and I'm going to zoom in just a little bit. So I'm not interested in buying a breakout when you're really stretched away from the 18 MA. We want to have a tight pattern relative to its 18 MA. And if you notice what took place here, on this first move up, you got a little bit away from the 18. And if this would have broken out at this point, I don't really think I would have been interested, because you had already been up 3 or 4 weeks in a row, and you had some space, a decent amount of air between the price and its 18 MA. But if you notice what happened, it didn't break out at that point. It actually pulled back and it formed a little pinch here on the MACD. And if we take a really close look at the DI line, if you notice when it pulled back, it held above the red. So green held above red during the pullback. And then if we want to take a closer look, the MACD line clearly was pinching in, but it holding well above its signal line. So both of those are really good signs as you're approaching a breakout level to see a little bit of a dip. And if you notice, this was a 2-bar pullback. This really does qualify as a pinch play. And we had this cross where green crossed over and held. So when I see this pattern develop tight to the moving average, MACD holding its signal line, and green DI holding above red, I'm willing to buy the moment this crosses above this blue horizontal line. We have the kind of conditions in place that suggest immediate follow through. And that's really what we're trying to identify if we're going to buy a breakout. Now, there's 2 different ways to handle this. If you like the bigger picture so much that you're willing to go ahead and buy the breakout here because you don't want to miss it, that's totally fine. But if you're going to do that, you're going to have a wider stop. You got to give it more room. You have to give it probably underneath these lows here, as opposed to using the breakout bar or anything like that. If we get a move like this and then we hold the 18 and then break out, now your stop's going to come underneath this reversal bottom, which is going to be a little bit tighter. In most cases, it's going to be tighter. And so I think that's just a one small thing, but I think it allows you to buy more shares if you're tighter to your stop, because you want to keep the risk as a percentage of your equity. And by doing and having a slightly tighter entry that way, it improves the overall risk reward scenario. Let's just go and look at another example. So if I look at Stitch Fix, another one that I have been looking at, the breakout area is in here. And again, so this is the reason why I wanted to bring this up. If you notice, this is really where the pullback was. But if you notice, it had moved higher when it was breaking out of this area, but it had spent a few days consolidating before it really took out this high here on this bar. And so where I probably was not as interested on this first poke through because it had already moved up 4 or 5 bars, because it checked back and back to the 18 MA, had an inside bar, and then started moving higher. To me, this is a much more attractive bar to be a buyer than this earlier entry. And so, we're talking about small details, but when you do it this way, I think it gives you the ability to see immediate follow through in your favor. Again, you don't necessarily have to do it this way. If you want to play the game where you buy on the initial thrust through and use a wider stop, give it some room. If you do that, you're going to be fine. You're going to probably have some price action volatility before you get the follow through to the upside, but it will work. What I'm trying to guard against is the guy that wants to buy this tight breakout. He wants to buy the moment it goes up, and then if it comes back down through, he gets out. And a lot of times I see guys that trade that way, and they end up missing the ultimate move because when it turns back up the 2 days later, they're not watching it. So my suggestion to you from a trading standpoint, a trading tactic standpoint, is either don't be too obsessed with the breakout level and having all the perfect conditions in place. If you like the overall pattern, go ahead and buy it and use a wider stop. Give yourself some room underneath both moving averages and the last major pullback on whatever time frame you're buying the breakout on. In this case, it's a weekly chart. I'm going to give it a lot of room and come underneath this prior bottom. If you want to play the tight game, where you're going to use a pretty tight stop, like the low of the bar or something like that, then you need to make sure you're tight to the moving averages, your MACD has pinched, and you got a rising ADX is great, but you want to make sure the green is clearly holding above the red on any kind of a pullback before you do any buying. Let's look at one more example. So TRTN is actually an example of how I think people can lose money buying breakouts. So if you notice, I've drawn the horizontal line in where this was kind of a key level here in January 2020. And if you notice on the breakout, you had a really big bar. I mean, this was really good price action on the breakout day. The problem was it was already up 4, 5, 6 days in a row prior to taking out these highs. And if you do that breakout, you're gonna get some kind of a pullback most of the time. I would say it's a very high probability, like 85% of the time, you're probably gonna get some kind of a retrench back in. And my suggestion is go ahead and let this bar take out those highs. If you're already up 4 or 5 days, you're stretched away from the 18, go ahead and let that happen and then wait for your first pullback. If we look at the two types of plays that I'm trying to focus you guys in on, one is the breakout play and the other is the pullback play. I have done numerous videos on pullback play. Go through my 2 time frame pattern. It is a quality setup using the ADX, using the MACD to help with the timing and the selection. But if you spend time and study that, this is actually what took place on this pullback. We had a 2 time frame setup with a weekly and the daily triggered you in. So what we're trying to find are the breakout plays, but sometimes the breakout comes from a point where it's extended above the 18, and that's just not where you want to be entering. Again, if you want to buy this breakout and give it a lot of room, like under 30 or something like that, that's a 10 points on a $40 stock. That's 25% of risk that you're taking. You can do that, but I think you're a lot better off in this situation. Let it play out and buy the first pullback and look for the 2 time frame setup to get you into this breakout play. So I hope this was helpful in getting you to understand the 2 key trades, the breakout trade and the pullback trade. I want to make sure you have a clear understanding of breakouts and when to buy them and when they're tight to the moving average, and that's very, very important. I hope that came across today. If you have any questions, please post them and hit that like button, and we'll talk to you soon.